What's going on, everyone? We hope you had a great weekend and are ready for an exciting week in the market. On Friday, there was a lot of bullishness as 79% of the S&P 500 closed up in the green, and we saw a handful of stocks have some pretty big green days. In today's episode, we're going to cover everything you have to know for the market for this week, some key events to keep on your radar, and some of the strongest moving stocks right now. We also have a pretty interesting $3.2 million big money trade towards the end of today's video, and you're not going to want to miss this one. So stick with us all the way until the end. But besides that, Tom, let's get right to it.
Yeah, Mike, this week's going to be a pretty crazy one in the stock market. And once again, this is going to be another short week as the market will be closed on Thursday, January 9th, in memory of Jimmy Carter. The market does this whenever presidents pass away. It ends up closing in memory of them. This happened for George H.W. Bush as well. So just keep that in mind. But the market will be closed on Thursday. Just wanted to throw that out there so that nobody forgets, because this is one that is not planned for necessarily. The next closer that's planned for is January 20th for MLK Day. But Mike, getting into this fun price action from last week, the SPY was up 1.25% on Friday. That heat map was amazing, and there's a couple standouts here. Two big boxes: Tesla 8%, Nvidia 4.45%. We're starting to see some pretty good buying pressure come back in after some selling to start the year in 2025. And with Nvidia's move, that's a great sign, back above 140. And hey, Tesla's picking it right back up where things left off last year. So maybe the year's going to start off a little bit better than we thought initially.
Yeah, like when we look at some of these momentum crazy stocks in the short term, like Tesla, there have been some really big moves in both directions. Like you said, on Friday, Tesla popped by 8%. That was great to see. But when you zoom out over the past couple of weeks, it has definitely been pretty rough for that one. But that when you zoom out even more, it has been, very strong. So basically what we are seeing right now is a lot of strong movement in both directions right now across almost all stocks in the market. And this goes hand in hand with the broader trend of increasing volatility. Whether you are looking at Tesla and how it's up 8% on the day, or whether you look at some other stocks like OKLO, Rivian, Archer, SMR, MSTR, ARM, Palantir, anything else, we are seeing some big, strong moves right now. And of course, like in a broad sense, like if you just approach the market in in a way where you're only bearish or only bullish, it's going to be a rough time for you. But for those who are kind of, going to the market with like a neutral standpoint each day and adapting with the momentum as it unfolds, a lot of big opportunities are being presented.
Yeah, there are, and I think that one area of the market where there's a lot of opportunities right now is the nuclear sector, and there's a lot of different tickers out there. One of my favorites is SMR, which makes those small nuclear reactors, which I thought was pretty interesting, but nonetheless, there's a lot of different nuclear stocks out there, Mike, and, there's a pretty good list here that I found. OKLO, SMR, NNE, Nano Nuclear Energy is another one, CEG, VST. There's a whole bunch of different nuclear stocks out there, but let's focus in on some of the more popular ones lately, like SMR and Oklo, of course. I just love the moves out of these nuclear stocks, Mike, and a lot of people are bullish on these with all the AI demand coming out. A lot of people are thinking that the AI demand will end up fueling the nuclear business, and we saw that happen as SMR and a few other of these stocks started to rise towards the end of last year. But it's definitely interesting, though, to see them starting to come back up off the dips, and some of these supports that are being held here are pretty good. Like SMR holding the $17 to $18 support is a pretty good sign right now.
Big time. And, these stocks do move in some pretty strong ways. So let's say when we look at SMR right now, you mentioned that it's holding that $17 support right around that area. What would you say are some key levels to keep in mind with this one going forward in terms of resistance and maybe even some chart setups that you're seeing?
Yeah, right now, honestly, it's starting to downtrend a little bit from the top. So as we start to see this thing rise back again, the big question is hey, is this going to be another series of higher lows, or are we going to actually come up and start to make, a new all-time high? And there's a few key resistances that I am watching on the way up, Mike. $25 is huge. That's going to be a big psychological level coming up first, but $26 especially is going to be the next major level after that. But even more in the short term, I really like this recent peak right around $22.50 as SMR rises. And I think for next week, that's going to be a very big target in the short term. So if we do end up getting to that peak, 22.30, 22.50, very close to that range, then I will look to maybe take some profits there and just look at that area as resistance. But as always, if it rips up through there, then, of course, keep looking at to the upside, right? Because there's a lot of bullishness that could come into play off of this support. But that's really what I'm looking for here, because it's like, hey, sure, like we got that good move Friday, but we need to really see a good break of this range.
No doubt. And, whether you're looking at SMR or any of these other stocks right now, there is a lot and increasing momentum all across the board, which is great for short-term traders. But you really have to be willing to adapt because, the direction of this momentum can turn on a dime. So just keep that in mind. Approach the market with an unbiased viewpoint each day. But another thing that I thought was pretty interesting is that as we head into the beginning of 2025, it's worth noting what the market normally does around this time of year. As we looked at some past data over the past few videos, the first quarter of, let's say the first year of a presidential term normally isn't the strongest. But when we look more specifically at the past 20 years worth of data, we can see that the first couple weeks of January tend to be decent for the market. Nothing too crazy, but an uptrend nonetheless. But we do normally see a peak around the midpoint of January. And I think this is especially interesting for this year, given that we're going to have the inauguration on January 20th as well, which, of course, will definitely spice things up a bit.
It really will. That'll be a fun inauguration coming up. And the market will actually be closed that day for MLK Day as well. So I guess the next day we'll see some real action. But towards the end of January, it is interesting how the market is flat. And I thought that even heading into March, I thought it was interesting how for the first couple months, there's just a lot of flatness and a lot of up and down action. And I think that just goes to show, like you've been saying, to be so adaptable here, especially right now in the short term with all this up and down price action that we're seeing and all this crazy volatility in both directions. But I think this is interesting data. And I will say, once we get into April through July, I'll hope to revisit this, and hopefully the market's doing this by then. But we have to remember that each year is different, and looking at historical data is awesome. But as we know, each year is independent, and each month can have its own, we'll say, events and price action happen.
No doubt. I think the people who are really doing the best right now are those who are not truly married to either the bull side or the bear side, but are just, adjusting to how the market is, trending for that day. But either way, looking at some important events for this week, we definitely are starting to see some excitement come back into the market, as on Tuesday we have ISM and JOLTS data, both 30 minutes after the market opens, and then on Wednesday we have an FOMC minutes report at 2 p.m. Eastern Time, which isn't as crazy as, let's say, normal FOMC interest rate decisions, but it definitely can move the markets. And I would say most exciting of all, on Friday, 1 hour before open, we have non-farm payrolls data and the unemployment rate set to release. So that'll definitely move the markets quite a bit.
Yeah, that sounds awesome, and I really honestly can't wait for the FOMC minutes because of how Powell talked about the Feds possibly looking at less rate cuts in 2025, and I can't wait to hear maybe some of their thoughts about that. But going into some of the earnings for next week, it's even picking up there, Mike. Well, so we have, honestly, it's not the most earnings ever, but earnings season is getting back into the swing of things. Next week, we'll see a lot of crazy reports. Towards the end of the week, though, on Thursday, KBH does report, which is pretty big. And then I do like Tilray, Delta Airlines, and Walgreens on Friday. Walgreens was actually the worst performer in the S&P last year.
Nice. Looking at Walgreens, yeah, it's definitely been pretty rough for that one. And I know there are some talks of potential buyout or takeover happening. So, any updates related to that can definitely move the stock quite a bit, but I think right now it's at a point where like everyone's looking at it. Some people are looking to buy the dip, others are certainly not, and we're all just like waiting for like an update about like what's going to actually happen with this company going forward. But what I do like is that in situations like Walgreens is in now, the volatility does tend to increase, and we've been actively seeing that over the past couple of months with this stock. As we can see, we have seen a handful of like pretty big jumps off this like $9 support area and even like all the way down to $8, but it does have that like asymmetric potential when the news and momentum is there. So I definitely agree with you. It will be an interesting stock that's worth keeping on the radar. That doesn't mean it has to go absolutely crazy this week, but I wouldn't be surprised if it did have some like decent movement sometime soon.
Yeah, that would be good to maybe get some updates there on this earnings report, or even, just to have a good report and just to see the price action heading back towards that resistance. I definitely think that this is an interesting setup that it's in, and the range that it's starting to form with that big support around like 825 up to like that $10.90 to $11 resistance is definitely a huge range here in the short term. I'll be looking for a possible touch of the top of the range possibly soon, but either way, earnings season starting to pick back up again. Next week, we'll see a lot more banks come in, which will get a little bit more interesting as well. But I know WBA has had a pretty bad rap the past couple years. There's been a lot of people talking about Amazon and others getting into the online pharmacy game, and I don't know, maybe WBA can pick something up as far as that's concerned.
We shall see. But looking more at, let's say, SPY for right now, Tom, what are the most important levels to keep on watch for both directions, and what are you seeing with the charts?
Yeah, right now the S&P 500 is pretty wild in both directions, like you said. On Friday, with the way that it ran up, it actually broke a good short-term downtrend, which was really good to see. Seeing that it was able to break out and up above 590, I thought was a really good sign. And then, of course, at the end of the day, it even broke 592 a little bit, got towards 592.50. But as you can tell, the SPY is still in, let's be realistic here, an overall downtrend. But I think that we're starting to get into a point where we're starting to see more neutrality. We're also seeing at the same time higher lows, but we're also seeing lower highs. So we're seeing a very weird thing play out now where I would say the SPY almost looks like it's getting into a wedge. Now you can like wedges or dislike wedges. Either way, I'm looking for the price action to kind of consolidate in between this bigger range. So for this week, I think it's really important to watch for some of these key resistances coming up. I think 594 and 595 is resistance, as the first resistances are going to be crucial. And then after that, 598 and then $600 will ultimately be the main resistance that I'm watching for. If we could see SPY really get through $600, it'll kind of show that this trend of posting the lower high will start to end.
Yeah, and that is a good point. And that's actually what I was just gonna bring up. Like right around that like $600 to like $602.50 area is where that most recent high is. So if SPY can get through that, that would be a great sign for the bulls, and it would actively show that the buying pressure is stronger than most people think. But on the other hand, if SPY does not get through this level, that will genuinely be a somewhat concerning sign, at least in the short term, because it's going to show that the selling pressure is, not only stronger, but also more resilient than most people think in the market. And that is a key warning sign to, be aware of going forward, because when you have lower highs getting posted, it really represents the, overall supply and demand dynamic that's in the market shifting in, let's say, a bearish way. So either way, I think we really have to pay very close attention to this potential break of the lower high in the short term, because I think that is what's going to be like the most telling sign, honestly, over like these, like at least the next couple weeks.
Yeah, exactly. And even with the lower highs as well, like if we start to see a really good, we'll just say a pullback, right? I don't want to call it a crash. I almost misspoke there. A lot of people flame me in the comments, but if we see a short-term pullback there, that would be a pretty bad sign as well, in a negative way to the downside. So I will be watching for that to potentially break. And Mike, there's just such a weird dynamic here with the SPY, how it's very back and forth right now as it's kind of stuck. And I would say at the beginning of the week, just be ready for a lot of chop. You know, I don't think that the week will be nice and consistent like we've been seeing on this overall uptrend into the beginning of this year. I still can't believe how much shakiness / volatility has hit the markets.
Yeah, so we're definitely set for a pretty exciting next couple of weeks, that's for sure. But let's start to talk more about some specific setups and predictions. A stock that is close on my radar is SNAP. This stock had a pretty good day on Friday, and the stock has definitely been uptrending over the past couple of months, which is good to see, but it definitely has a lot more work to do if it really wants to make some, sizable gains over the long term. Either way, it does have short-term resistance right around this like $12 to $12.15 area, and if it can break through that, it has a fair amount of room all the way up to 13. Given the recent surge of bullish momentum, not only with this stock on Friday, but also just most stocks in the market, this stock is definitely on my radar for a potential continuation, but I would really love to see a break above that like 12 to 12.15 area first, and then, get closer to 13.
Yeah, I really like that resistance. There's been a lot of touches around like 12.15, like you said, and if we end up breaking that here, I love that range. Back up to around 13 looks pretty solid. I'll definitely keep it on the radar. Snapchat has some pretty good directional movement. Once it starts to get that direction, I would say settled out. But with my first setup, I'm looking at Oklo to the upside. This stock was up 4% on Friday as the nuclear stock started popping off again. It's getting pretty close to $27.60. So if we're able to break that resistance, that's where I'll look for another breakout with Oklo coming this week. I want to see 27.50 break, and then we'll even give it 10 cents up to 27.60. But these nuclear stocks are definitely going nuts. So Oklo is one of the bigger names that has had some of the best movement in this sector.
Yeah, it has been a powerhouse throughout 2024, so that's nice to see. But another stock that's on the radar in a bearish way is Netflix. I know I talked about this one a bit in last week's videos. Basically, the stock has been downtrending in the short term and has been somewhat flat over the past month or so. This is happening as we are seeing increased general weakness in the market as a whole. Netflix has some pretty decent support right around that $877 area. So I am looking for a potential break through this area and continuation lower. The more pressure this stock puts on its recent lows, the better the setup will become. And of course, as always, if the market is up 3% tomorrow, there's not really a good reason to try and short, Netflix or try and, fight the trend. But assuming we do see some like relative weakness, this stock is definitely towards the top end of my bearish radar.
Yeah, I like it. It's been slowly selling off here in the short term, and I can see the support starting to give out. It's forming a pretty good base up at the top. But with my next setup, I'm looking at MU, and I talked about this one a little bit last week, and on Friday, it continued the uptrend really well off of support. So I will be watching it again this week. There's a pretty big resistance coming up in the short term, right around $90 to $91. If we can see 91 start to really break to the upside, I'll get a little bit more confidence with this one. There was a little touch right around 93 as well, so you can maybe watch out for that as a possible area of resistance once we break above 91. But nonetheless, I'll keep watching it back up. This range that it's been in on the daily chart is insane and keeps holding up. If the range gives out and we see the $84 support break, I'll watch MU back down. But for right now, we're seeing a decent hold and bounce back up.
All right, sounds good. I will keep that one close on my radar as well. But besides that, it is now about that time for today's momentum plays. And with the first one, we have SMR to the upside.
SMR, another nuclear stock here. In the short term, it's been on fire. If SMR is able to break above $21.05, keep watching it up.
All right, with the next one, we have RKLB also to the upside.
Rocket Lab, if it's able to break above $28.80, right around the high of day Friday, then keep watching it to the upside as well.
And then with the last one, we have Carvana to the downside.
Carvana, they have not been sharing in the growth stock love lately. If they end up falling under $175, then keep watching Carvana down.
All right, so we have the downside level for Carvana, and then we have the upside levels for RKLB and SMR. These 3 stocks are on watch for potential momentum plays tomorrow if and only if they break through the levels listed. The stronger and more consistent these stocks move, the better the setups become. These stocks are volatile, so as with any other stock out there, but especially stocks like these ones, you have to have stop losses and be more than happy to flow and adjust with the trend changes as they happen. So either way, keep these ones close on watch. And besides that, Tom, we are all clear for today's $3.2 million big money trade. And we are looking at ticker symbol IREN. On Friday, the big money bought the 12 strike call options that expire on August 15th of 2025. IREN has been a pretty hot stock throughout 2024. It's a data center company. They also focus on like Bitcoin mining, AI cloud services, and other things like that, we'll say. And basically looking at IREN, this stock is recovering from a recent short-term dip, and these options are pretty close to the money, and they have a fair bit of time to them. What I think is interesting about this setup is that the stock has been uptrending not only strongly, but also relatively consistently over like the past year or so. And, with a stock that is tied to, let's say, naturally very volatile industries like data centers and Bitcoin mining and AI cloud services, this stock will naturally be very volatile. This can work for you or it can work against you. In a good sense, if these industries continue to get more and more hype and continue to grow as expected, IREN has a lot to gain from that. But at the same time, with, let's say, volatile industries like these ones, they don't necessarily just go straight up. So if you are considering following this type of trade, you have to be more than willing to accept the, volatility that's going to come along with that. I like how, the big money scooped this up after a recent dip. And, it's definitely a stock that's definitely worth keeping on the radar. But I will say, like, in a short-term sense, it would be really nice to see the stock hold that like $9.80 to $10 area of support as like a short-term risk management technique.
Yeah, I would like that area quite a bit. It's a good support, and if we break below there, I would get a little bit more worried about this one. It does have out to August, which is kind of surprising to me because I kind of like the short-term support, and, if it rips up to 12 in the short term, I would think a lot of people would want to target maybe this recent resistance right around 13 as a possible target for some profits, but there's a lot of time to this. If we do see, like, let's say a test of this recent double top around 1570, and then maybe even a break of that, there could be some good potential action even after, we get to $12 and beyond. But this is a very interesting big money play. $3.2 million put into this one. The main concern I have is that double top. That's going to be the big question. So if we do see 10 break, I think I'm with you there, Mike. That would be a good area for, your risk management strategy as like a stop loss potentially.
No doubt, but either way, this is a $3.2 million trade, so keep it on your radar, and it's definitely in a hot area of the market. So we'll definitely keep some close eyes on this one. But before we go on, let's give a giant shout out to today's member of the day, Benny C. in the Stocked Up trading floor. Benny had a great post on Friday showing some awesome gains all around, and Benny's a much-loved member of the Stocked Up community. Huge shout-out to you, Benny. Thank you for everything, and we love having you in the community. We have a lot on the schedule for 2025, and it's definitely going to be an exciting year. So keep up all the great work going forward, and let's keep on rolling. If you guys are new to the Stocked Up YouTube channel, welcome, and consider obliterating that subscribe button. If you do that, you'll get our videos recommended to you more often. We cover the most important news, information, earnings, setups, big money plays, and everything you have to know about the market in around 20 to 25 minutes or less. So consider joining the Stocked Up crew by obliterating that subscribe button. Don't forget the market will be closed on Thursday and that there is some pretty serious momentum brewing all across the market. So we should see some pretty strong moves this week. Thank you all so much for watching, and let's crush it in the market tomorrow.